Hey guys, welcome back to Web3 Daily. So today's market, honestly, the first thing I thought when I opened the charts was, damn, Bitcoin's bleeding slowly. Last night, it dipped below 115, tried to bounce a bit, but the vibe, it's giving controlled descent. Ethereum wasn't any better, almost down 4%, like someone's lowering it gently with a pulley. Altcoins, pretty rough. XLM dropped like it forgot how to fly down over 6% in one go. Meme coins like PEPE and Shiba clearly losing steam. Even SOI and TO and sleeping quietly, like someone's pulling liquidity while no one's watching. Link was the only one that made me blink twice, up 18% in a day. I actually thought my data feed bugged out. It was that violent. And the look, after 5 straight green candles, this pullback was overdue. The market was overheating. The people who wanted to sell already sold. What's left now is just a room full of traders side-eyeing each other, waiting for someone to move first. Volume's down. Volatility's drying up. Feels like we're entering one of those in-between phases, where no one wants to go first. If you're still hunting for the next all-in moment here, I gotta be honest, slow your roll. Especially with macro stuff coming up. Powell's got speeches lined up. One wrong word and the whole thing gets shaky again. So yeah, to me this market feels like humid air before a thunderstorm. Still on the surface, but full of pressure underneath. We're all just waiting to see who flinches first. Now, if you've been on X lately, you probably couldn't miss it. Everyone's talking about one insane headline. Binance getting dragged into some Trump meme coin drama. Wall Street Journal dropped a story saying CZ acted as a broker for this project called World Liberty Financial. Sounds like a joke, right? Except WLFI claims they've raised 600 million, have connections to Trump's family, and even mentioned Sun Yuchen's name in the background. CZ went straight to X and clapped back, said the article's nonsense. He doesn't know these people, never helped them, never brokered anything, period. But here's what this story really shows. Web3 just got pulled into the US election cycle. And this time, it's not about donations. It's full-on political narratives built around tokens. You can feel it. This is no longer about just tech or finance. It's about optics, about control, about who gets to tell the story. The media's angle is also clear. Web3 is now painted as the Wild West of political fundraising. And that narrative, it's sticky. So no, this won't crash the market. But long-term, it shifts the terrain. Because now, every big Web3 company has to think like a geopolitical actor, especially Binance. What happens if Trump wins next year? What happens if this project gets more press? What happens if Binance becomes a political talking point? I'm not saying I know, but it makes me ask, is Web3 actually decentralized? Or are we just watching new centers of power take shape? Let's get into what's really moving the market. Couple days ago, over $3 billion of realized profit hits the chain. That's the biggest single day realized gain since July. When I saw that number, it clicked. That's why long positions have been getting wrecked lately. People weren't waiting for 130K. They already left the party. You're just now noticing the lights are off. Here's the deal, this bull run feels different. We're still getting pullbacks, but they're soft. 30%, 12%, 9%, and now this barely 7-8%. That's not panic. That's managed. It tells me the whales want this to keep going. They're not done, but it also tells me this. Slow declines are the most dangerous kind. They don't trigger stop losses. They wear you down. We're sitting right near the max pin zone for options, around 120K. Unless something macro shakes the table, this market's gonna stay in this choppy sideways mess. So yeah, if you're trading leverage, good luck. If you're spot holding, might be time to test your boredom tolerance. Sometimes the win isn't about speed. It's about not flinching. Speaking of not flinching, Link didn't just survive today. It outperformed everything. 18% up. Out of nowhere. No airdrop. No fake pump. Just real buyers. Link's been that undervalued but critical asset in DeFi forever. Every major protocol depends on it for price fees. Yet the price flatlined for 2 years. Now suddenly, it's back. Here's why. 1, they rolled out a new mechanism called on-chain reserve. It basically buys Link using protocol fees and locks it up. Think stock buybacks, but on-chain. 2, they partnered with the Intercontinental Exchange. Yeah, ICE, the parent of the NYSE. That's some serious TradFi crossover. 3, the market finally snapped out of it and realized the Link's been criminally underpriced. Good tech, great infra, no hype. Just buried. This wasn't a whale pump either. On-chain shows tons of retail wallets buying. That's organic momentum. Only thing to watch now, that 30 resistance zone. Lot of bag holders up there. If it breaks clean, we fly. If not, we chop. If you've been holding, congrats. If you are only now looking to APing, buckle up. Let's switch gears. US Treasury just opened the public comments for the Stablecoin Innovation and Protection Act. This isn't a draft. It's law. It's happening. The goal: build an actual compliance framework for stablecoins, full KYC, audits, reserves, the works. And they're coming for the shady stuff too. Treasury and DOJ are teaming up to go after illegal crypto flows, especially cross-border stablecoins and unlicensed offshore action. What does this mean? Institutions get green lights. Now that there's legal clarity, players like Circle are gonna thrive. Expect USDC to take more market share. But the unregulated stuff is on borrowed time. This won't nuke the market today, but it'll create two classes of assets, the clean ones and the ones on the blacklist. So yeah, this is the moment to reassess your stablecoin exposure. Look at what you're holding. Make sure it survives the next cleanup cycle. Now speaking of Circle, they're not just reacting to regulation, they're building for it. Circle just announced their own blockchain ARC. No, not just another loan. This is different. ARC is designed around the USDC as a native layer, not a token on top of Ethereum, but the foundation of a new on-chain financial system. They're calling it the core settlement layer for digital finance. And you know what? That's not an exaggeration. They're not building another DeFi casino. They're building something that looks like the future of banking infrastructure payments. Clearing, custody, even bonds and treasuries. All natively on-chain, all centered on USDC. If they pull it off, USDC isn't just a stablecoin anymore. It becomes a protocol, a platform, maybe even America's Ethereum. Let's see if they can bring developers and institutions in. Because if they do, this thing could flip how we think about money on-chain. Now for the weirdest headline of the day. Google just increased its stake in a Bitcoin miner to 14%. Yeah, Google. The company is TeraWulf. They're building a massive data center in New York. And here's the kicker part of. It's being leased to an AI cloud platform called FluidStack. For 10 years. So what's this really about? Simple. AI needs compute. Miners have cheap power and hardware. Put them together, and you get a whole new asset class, AI mining hybrids. This isn't about BTC anymore. It's about who owns the machines that run the digital future. And guess what? If you're a miner, this is your hedge. When BTC is down, rent your power to AI. When AI chips get expensive, provide an alternative path. I wouldn't be surprised if other miners follow, and I wouldn't be surprised if other tech giants copy Google. Watch this space. Last one for today, and it's Super Web3. BTCS, a public company, just announced an ETH dividend. That's right, you can get your shareholder payout in Ethereum. But wait, there's more. If you lock your shares into registered form and hold for 120 days, they'll give you an extra ETH bonus. Loyalty staking, but for stocks. It's actually brilliant. The stock's been under pressure. They've got crypto on the balance sheet. So they're saying, screw it, let's share the upside. It's the second time they've done this, and it worked. Stock popped 7%. Shorts got squeezed. More importantly, it's a sign of things to come. Traditional finance is stealing tokenomics. Crypto companies are finally using their assets to benefit equity holders. This could be the blueprint. Watch for more of these. Alright, that's it for today. Right now, this market feels like that empty subway car late at night. Still moving, but no one's sure where to get off. You're not alone if you feel stuck. Not bullish enough to ape in. Not bearish enough to bail. Just kinda floating. That's normal. I haven't been trading much either. Just watching, waiting, trying to sense where the crowd breaks. Because in Web3, silence isn't peace. It's the eye of the storm. So I'll leave you with this. Don't rush to win, just don't lose.